Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalyst talk. Today we're looking at MicroStrategy.
If you find our talks useful, please consider subscribe, like, and comment underneath to support our podcast. And if there's any stock you want us to look into, leave it in the comments section below.
So let's get into the analysis. For MicroStrategy, anyone new to the stock has to understand one foundational truth right away.
Which is that this isn't really a software company anymore?
Not in the way you'd think. That's the crucial shift. You have to look past the legacy business unit. It's almost irrelevant to its main identity now.
Totally secondary.
Absolutely. MicroStrategy is, for all intents and purposes, a Bitcoin-centric balance sheet vehicle. I mean, its valuation tracks the spot price of Bitcoin more than 95% of the time.
So it's basically a leveraged proxy for Bitcoin.
A high beta leverage proxy, exactly.
And the scale of this bet is it's staggering. They hold the title for the largest, most transparent public Bitcoin balance sheet on Earth.
It's massive.
We're talking about, what, over 263,315 Bitcoin. That's institutional whale status.
It is, and the transparency is what really matters there. Plus, when you look at their average cost, it's sitting around $39,000 per coin.
39,000. So with Bitcoin near, let's say, 110,000 today.
You're looking at assets valued around $29 billion.
29 billion. On the balance sheet of a company that, historically made a few $100 million a year in software revenue, that just changes everything.
It changes the entire rule book. For a normal company, revenue comes from, selling things.
Mm-hmm.
For MicroStrategy, it's overwhelmingly driven by the accounting treatment of Bitcoin.
Okay, let's unpack that. The fair value revaluation, that's where it gets a little tricky for the average person, right?
It is. It basically means the business model is almost binary. Bitcoin is an intangible asset. So if the price shoots up in a quarter,
like it did,
they have to mark the entire value of their holdings up to that new price. And that creates a massive non-cash gain on their income statement.
So wait, they don't even have to sell it to report $1 billion in profit.
Precisely. We saw that in Q4 2024. They reported, a net income of $1.2 billion.
Huge.
And that wasn't software sales. It was almost entirely a $2.1 billion non-cash gain from their Bitcoin. It swallowed all their operational costs.
That is an incredible amount of leverage to the asset price. And the sensitivity, it just keeps going, right? Q1 2025 looked pretty similar.
It did. They announced preliminary revenue of about $97.4 million. That's 55% growth year over year.
And that jump, that was, again, just Bitcoin's price movement.
Almost all of it. The move from roughly $90,000 to over $110,000 was the main driver.
Okay, so this is where it gets really interesting, technically speaking. Their EBITDA margin from those gains. It surged to 199% in Q4.
Right.
How is a margin over 100% even possible? For anyone listening, that sounds like it breaks finance.
Well, it does look impossible because it's not from operations. The operational EBITDA from software is, it's modest.
Yeah.
Maybe even negative. That 199% figure comes from recognizing that massive non-cash gain above the operational line. It just multiplies the effective margin.
So it's not that the software part is super profitable, it's just the accounting structure leveraging the entire company.
That's the insight. That's exactly it. It's pure operational leverage to Bitcoin. And it's why analysts have revised their EPS estimates up by 400% in the last 90 days. The market gets it now.
Okay, so let's talk balance sheet. This leverage isn't free. People always point to the $2.2 billion in debt. That sounds like a time bomb.
It sounds like a mountain of debt, but the structure is the crucial detail here.
How so?
It's all non-callable and long-dated. We're talking maturities between 2028 and 2031. There's no immediate risk of them having to pay it all back.
But what if Bitcoin crashes? I mean, really crashes. Don't the creditors just come knocking? That's the big fear.
That right there leads us to the single most important risk mitigant in this whole thing.
Which is?
A huge portion of that debt is structured as non-recourse debt.
Non-recourse. Okay, we can't gloss over that. What does that actually mean for you, the investor?
Well, think of a normal loan. If you default, the bank can come after all your company's assets, right? The software business, future money, everything. That's recourse.
Got it.
Non-recourse means the creditors can only go after the specific assets pledged as collateral.
Which, in this case, is the Bitcoin itself.
Certain tranches of it, yes.
Yeah.
So in a worst-case scenario, a deep bear market, the creditors can take that pledged Bitcoin, but they can't force the software business into bankruptcy.
So the company is literally designed to survive a huge crash.
It's designed to survive, exactly. The leverage is intentional. They're basically running a multi-billion-dollar hedge fund strategy inside a corporate wrapper.
And you see that aggression in how they manage their cash, too. They've just been relentlessly accumulating. Cash reserves went from almost 300 million down to about 2 million.
It's a razor-thin runway.
It is.
It shows incredible conviction, but it's a tightrope. They're choosing to maximize exposure and minimize cash drag. For an investor, though, you have to watch that cash balance like a hawk.
Let's shift a bit to the competitive moat. I mean, there are other ways to get into crypto. You've got exchanges like Coinbase, miners like Riot. Why MicroStrategy?
That's a great question because it's so different. Exchanges make money on fees, so they're exposed to trading volumes and, a lot of regulatory risks.
Right.
Miners have huge operational costs, electricity, hardware, all of that.
So MicroStrategy just bypasses all those headaches.
Precisely. Their moat is really three things: scale, legal structure, and just narrative dominance. They are a pure play, non-operating holder. They just hold the asset.
And that scale gives them credibility. I mean, no one else is even close to that 263,000 Bitcoin number.
Exactly. And you see that commitment backed up by insiders. Michael Saylor bought 5,000 shares in March. The CFO bought in February. That sends a strong message.
And it's not just insiders. The big institutions are in on this now.
Oh yeah, the institutional flow is huge. BlackRock upped its stake by over 200%. Vanguard added a ton of shares too.
So when the biggest asset managers on the planet are piling in,
It signals they see this as a proven high-conviction proxy. It's like a leveraged vehicle without the fees of the new spot ETFs.
okay, so looking ahead, what are the key catalysts? What should people be watching for?
The most immediate thing is the Q1 2025 earnings release. We're expecting it around late April, maybe early May.
And nobody's looking at the software revenue, right?
No, not really. They're watching two things. First, the total Bitcoin holdings growth. The market expects it to be somewhere around 218,000 to 219,000.
Okay.
Any slowdown in that accumulation could make people nervous. And second, they'll be checking on that super tight cash runway we talked about.
And beyond earnings, there are other big events on the calendar.
Yes, definitely. There's the MicroStrategy Investor Day in June. That's where we expect them to unveil a new treasury dashboard for more transparency.
And probably update their accumulation targets.
That's the expectation, yeah. And then you have Michael Saylor's keynote at Bitcoin 2025, also in June. That always gets a lot of attention.
And you can't ignore the macro picture here, which seems pretty favorable.
It's a strong tailwind. I mean, you have over $7 billion in inflows to the spot Bitcoin ETF so far this year. That creates constant buying pressure.
Plus the Fed. The market is expecting a rate cut in Q3, which is historically good for risk assets like Bitcoin.
Exactly. A weaker dollar helps too. It all adds up.
Now, let's be fair and circle back to the risk, because
Yeah.
this is, as you said, a binary bet.
It is. The number one risk is simple: a sustained Bitcoin price collapse. If Bitcoin drops below $90,000 for a long time, the stock gets hit hard, period.
But like we covered, the non-recourse debt is their shield. They're built to survive that kind of downturn.
They're built to weather the storm. The structure allows them to take massive paper losses and just wait for the recovery without having to do a fire sale of their assets.
And what about the regulatory risk? People used to worry the government would force them to sell.
That risk has, it's largely subsided. The approval of all those spot ETFs was a huge signal. The SEC chair has called Bitcoin an asset class. So a forced divestment scenario seems, well, highly unlikely now. So if you had to summarize the whole thesis for someone trying to wrap their head around this, what is it? It's the definitive ETF proxy, but with leverage and unmatched management conviction. The entire investment case rests on the belief that Bitcoin will appreciate over multiple years.
That's it.
This company has tied its fate completely to the asset it holds. So it's really only for investors who have a deep, fundamental belief in Bitcoin's long-term future and can stomach the volatility.
So the downside is protected from total collapse, but the upside is still exponential.
That's the bet. They've engineered a defense against immediate failure while keeping that exponential upside potential.
It's a fascinating structure, a software company that's turned itself into a perpetual treasury vehicle for, well, a revolutionary new asset. So I guess the question you have to ask yourself is this: is MicroStrategy the best way for traditional finance to plug into a decentralized future, or is it just the biggest single point of corporate failure in the whole ecosystem? That's what you need to consider. We hope this look gave you clarity on MicroStrategy's leveraged bet. Don't forget to subscribe and hit the like button if you want more analysis like this in your feed.